The top business stories live from the Sky News City studio. Europe's biggest company, Novo Nordisk, raises its forecast, fueled by high demand for its weight loss and diabetes drugs. Goldman Sachs is to remove the bonus cap for its London staff, opening the door for multi-million pound payouts for top performers. And Pandora, the world's leading jeweller, reports sparkling figures. I'll speak to the chief executive. Good afternoon, this is Business Live with me, Ian King. We start today with news of Europe's biggest company, Novo Nordisk, which is once again raising sales and profits forecasts for the year. That reflected surging demand for its anti-diabetes and weight loss drugs, Ozempic and Wegovy. Sales of Wegovy doubled in the quarter, with 25,000 Americans starting on the brand every week during the quarter. The Danish company recently bought the US drug manufacturer Catalent in order to step up production for its blockbuster drugs. Well, Novo Nordisk now expects its sales growth to rise this year by between 19 and 27%, up from the 18 to 26% that it was previously forecasting. The company expects profits to grow by between 22 and 30% this year, up from the 21 to 29% it was forecasting in January. The company was reporting a net profit of 25.4 billion Danish kroner for the first 3 months of the year. That's £2.91 billion, which was up 28% on the same period last year. I've been getting analysis from Robert Ulster. He's Chief Investment Officer at Close Brothers Asset Management.
This stock just keeps on surprising in terms of expectations, and clearly it's the whole insulin plus the GLP-1, the weight loss drugs as well. It's just the sweet spot really of everything about an ageing demographic, an ageing population, and it's that's continually driving the numbers.
Some of the statistics within the release are amazing. 25,000 Americans every week are signing up to Wegovy, the weight loss treatment.
That's right, and it's, obesity is the new modern scourge. And Novo Nordisk is leading in that, together with some of the US pharma companies. And there's no real, we're just in the foothills really, because you've also got emerging markets, you've got China. So, that's what the market's pricing in. That's why it's been such an astounding share price performer.
And if you want more on that story, you can go to the digital platforms from Sky News Now to read my thoughts on Novo Nordisk's trading update today. Do have a look at that if you can. Now, demand for gold has hit its best start to a year since 2016 it emerged today. The World Gold Council, the industry body, said total gold demand in the 3 months to the end of March rose by 3% year-on-year to 1,238 tonnes. That was the strongest first quarter for 8 years. Well, part of that was due to heavy buying by central banks and to strong demand from Chinese buyers for gold bars and coins. The price of gold hit record highs during the quarter on a number of occasions. I've been speaking with John Reid. He's Chief Market Strategist at the World Gold Council, and I began by asking him which central banks were investing heavily in gold.
The biggest central bank buying we saw was from China. There were other central banks as well that turned up on that list. So Poland, India, Singapore, Turkey. But the Chinese buying was the largest during the quarter.
Worth noting that so-called over-the-counter buying, OTC buying, actually fell during the quarter. Why do you think that was?
Well, OTC buying is always a difficult line item within our supply-demand balance because to a large extent, it's a residual. We measure everything we can on the demand side and make measurements and estimates on the supply side. The difference is OTC buying. I think the fact that it remains a strong number is indicative of the continuation of the OTC buying we've seen over the last couple of years. I wouldn't pay too much attention to the small changes that can happen quarter to quarter.
Okay, weighed against that, demand from China was very, very robust. Why do you think that's it?
Well, I think there's a number of reasons why we're seeing demand from China. Part of it is the central bank buying we noted, which has probably taken place for diversification reasons. China doesn't have a huge proportion of its foreign exchange reserves in gold, only at about 4% and a bit, compared to double digit for many of the developed economies. So I think that's quite logical, and they've been buying now for, I think, 17 months in a row and look likely to continue to do so. China's always or almost always, the biggest gold market in terms of consumer demand as well. But the strength that we saw in the first quarter, I think was quite remarkable, particularly the pickup in investment in physical gold, so particularly the gold bars and to a lesser extent coins. And I think what's driving that is the lack of investable assets or desirable investable assets in China at the moment. China's got a very high savings rate, and a lot of that saving has gone into real estate historically. Obviously, the property market has been declining now for some time. The equity market's weak, and there's perhaps concern about the outlook for the renminbi as well. So that makes gold a really good choice for Chinese investors, and they've recognised that in this quarter.
I was very interested to see that recycled gold supplies were up 12%. Is it possible to sort of drill down into that and know where this is coming from?
Well, it's generally coming from the countries that consume the most gold and have the largest stocks of gold. We are seeing large increases, particularly coming through in India and China as well. But the recycling market is quite complex. In some cases, it's people cashing in their old gold jewellery because of high prices. In India, one of the things that happens there is that people take their gold jewellery in and exchange it for new jewellery. You often need to buy jewellery in India for various events and weddings, etc. So when the price is high, that does encourage the recycling of old jewellery into new. In the case of China, it's often a consequence of retailers changing out their stock. They introduce a new line or a new type of gold jewellery. If it doesn't sell particularly well, they'll scrap it all, recycle it, and make something different instead. So it is a function of the higher price. The fact that it was up 12% year on year in the first quarter is a big jump, but it is at a much lower level than we saw, for example, during the global financial crisis, when total recycled gold supply was much, much higher. And part of that's because it's only been, 15 years since the global financial crisis, and the stock of old, unwanted, inherited jewellery hasn't really had the chance to build up to the same degree that it did in the sort of 30 years before the GFC.
Now, mine production was up 4% during the quarter. Are you starting to see evidence that higher prices is acting as a spur to production?
Only at the margin. There are some talk of mining companies being able to access lower grade material, which is now profitable. But in general, the reaction to these all-time high prices from the mining companies will be evident in 5 to 10 years' time, because that's the sort of lead time that you need to build a new mine.
What about demand for jewellery? Would you expect to see that tail off if prices remain at these kind of levels?
Typically what you see is when the gold price goes up quickly is that jewellery demand does contract. And one of the interesting things about the gold market in the last couple of years is that jewellery demand has been strong and almost unchanged year on year. With the surge that we've seen in the price in the beginning of the second quarter, though, we are hearing reports about buyers standing back from the market a bit. So if we continue to see these record or near record prices that we're seeing at the moment, I think it will have some effect. But in general, I think the big story on jewellery is the fact that it stood up so well despite the high prices.
Some other business news stories for you now. Goldman Sachs is removing the cap on bonuses for its London-based staff, opening the door for it to resume multi-million pound payouts to its best-performing traders and deal makers. Sky City editor Mark Kleiman reports that removing the cap means several hundred UK-based Goldman staff will now be eligible for variable pay, which insiders claim could be worth up to 25 times their base salaries. The existing pay ratio was imposed under European Union rules, which the government recently scrapped. Shell has reported a year-on-year drop in profits for the first 3 months of 2024 due to lower natural gas prices. Adjusted earnings came down from $9.6 billion in the first 3 months of last year to $7.7 billion this year. However, that was better than expected, and shares of Shell have risen by 2.5%, with sentiment also buoyed by news that the company plans to buy back $3.5 billion worth of its shares. The performance was also better than the $7.3 billion that Shell reported for the final 3 months of last year, reflecting lower costs and higher margins in chemicals and energy trading. Shares of Standard Chartered jumped by nearly 7% earlier today after the FTSE 100 bank reported better than expected profits for the first 3 months of the year. The lender, whose operations are focused on Asia and Africa, reported a pre-tax profit of $1.91 billion for the quarter, which was up 6% on the same period last year. Well, that was driven by a stronger performance in trading and also higher profits in investment banking and wealth management, while it also saw an increase in the spread between what it charges borrowers and pays depositors. The world's biggest jewellery producer said today that sales will be better than expected this year. Pandora was reporting an operating profit for the first 3 months of the year of 1.5 billion Danish kroner. That's £172 million, which was up 20% on the same period last year and better than the market had been expecting. The shares have risen by 6% in Copenhagen. Well, earlier on, I spoke to Pandora's chief executive, Alexander Lacik, who took me through the figures.
We have online touch above 20% growth. You have our physical retail, which is around 7-8, and then you have our wholesale partners, which is around 1. So if you take that 1 and the 7, then that's kind of the physical part versus the 20 odd on e-business.
You've continued to open outlets during the quarter. You now have 700 worldwide. Do you have a target in mind that you might ultimately be aiming for?
Our network is roughly 7,000 points of sales, of which roughly 3,000 is what we label as concept stores, which is where we make the most of the business. In the strategy period that goes until end of 26, we've guided for adding net 400 to 500 more stores. Now, that doesn't say that we're not going to continue after that point, but that's kind of what we've guided the market for. So we still have a lot of space opportunities globally.
Obviously, the price of gold hit a record level several times during the quarter. Are you seeing that have any impact on jewellery demand?
Well, what happens when the gold goes, then the silver price kind of follows a little bit in general. Now, that has a lag effect on our pricing, if you may, or cost of goods. But when it comes to demand on when gold goes up, it's probably like in our supply chain. It takes at least 12 months before you can kind of see that passing through the whole value chain. So there's no immediate reaction when kind of the day price, if you may, goes up or down on those precious metals.
Now, all of the gold and silver you sell is now fully recycled. Do you get credit from customers for that? Is that a big influence when customers are making buying decisions?
I mean, first of all, at the end of 23, we reverted to only buy recycled silver in particular. Recycled gold, we have been at 100% for a while. Now, before this actually runs through the whole inventory of finished products, will be into the second half of 24. So there is no point yet to go and speak to our customer base that is all recycled, because we still have a part of the assortment that is not 100% recycled yet. So that conversation maybe happens next year when we're completely out of it through the entire value chain.
Now, obviously, you've set yourself a key strategy of changing perception so you're regarded as a full jewellery brand rather than just as a charm brand. How do you judge progress on that front?
Well, so if you look at our business, it's kind of, we have the origins of the brand, if you may, which is the charms and bracelet business. And then you can look at if the overall business grows, and then you can kind of look at the other parts that are not charms and bracelet, the pace of growth that you can get there. So the first point is obviously for the whole thing to go up, and then you have to look at the different segments. And what we see in the last year or so, and at an accelerating pace, is we see that the growth rates on what we call fuel with more, they're growing at a very high clip. So if you now take Q1 as an example, our Moments business was growing at 5%. The Fuel with More, and there's several collections that sit within that, they were growing at 34%. So, and of course, the total business is growing. So we see the incrementality come through in this way. And then, therefore, you can kind of judge and say, it looks like consumers are changing their views on what Pandora can offer.
I know I've asked you this before, but I'm always interested to hear what you have to say on it. But how important now is social media in terms of reaching consumers?
Well, I mean, social media, like any other media platform, is, if you use it well, can be an accretive way of reaching customers that are difficult to reach in other places. It's not our baseline platform, but it's certainly a nice add-on where you can kind of reach certain age brackets. Typically, if you take a TikTok, for instance, they will reach deep into a younger audience versus maybe a traditional TV channel. But you need to have the kind of whole mix sorted out somehow.
Give me an update, if you would, please, on lab-grown diamonds and the sort of reaction that you're getting to that right now.
Currently, we're at doubling that business versus a year ago. So it grew 87% in the quarter, albeit from a rather small base. I mean, we're a new entrant into the diamond business overall, so this is going to take a bit of time. But what we're seeing is quite a positive reaction, in particular from younger audiences. They're very, very open to this. Part of this is obviously that the value equation is more favorable. Some people are also paying more attention to, let's say, to the sustainability aspect of buying this type of gemstone. And I think there's a general movement in the diamond industry more towards lab-grown diamonds, so not just for Pandora, but in general, we can see that it's kind of shifting in favor of this type of solution.
That was Alexander Lachik from Pandora speaking to me earlier, and he mentioned, by the way, that in their shops, 56% of the customers are men. Well, still to come here on Business Live, we'll have a look at how the markets have done today. Don't go away.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before?
Yes.
Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better.
Well, European stocks have finished largely to the downside on a busy news day. As you can see, only the IBEX in Madrid finishing in positive territory. It's been a really busy company news day. Among those reporting today include the Danish container shipping giant Maersk. That's off 5%, while ING, the biggest bank in the Netherlands, is up 7% after its results beat expectations. Meanwhile, the Spanish lender Sabadell is up 3.75%. That's on confirmation it's received a takeover proposal from its larger rival BBVA, a story first broken by my colleague Mark Kleinman. Well, here in London, FTSE 100 has finished up nearly 2/3 of 1%. Of that 51-point gain or so, 18 of that alone has come from Shell on the back of its results. Elsewhere, the leading percentage gainer in the FTSE is Standard Chartered. That's risen by, look at that, 8.75% at the close, while Smurfit Kappa, the packaging group, that's finished up 5.75%, also on the back of a trading update. To the downside, well, Melrose, the aircraft engineering group, that updated the market on its latest trade today, failed to light any fires. That one off nearly 3%. Over on Wall Street, well, stocks have rallied. There was a sell-off last night triggered by hints from the Fed Chairman Jay Powell that US interest rates will remain at elevated levels for longer. But as you see, stocks opening to the upside today. Among the features, well, Apple is ahead by just under 1.5% right now. It's got results out after the closing bell tonight. While the chip supplier Qualcomm is up 9%. That's after its quarterly results beat expectations. To the downside, Peloton is down nearly 12%, and that is on news that its chief executive, Barry McCarthy, is stepping down, rather unexpectedly, that one. Over on the foreign exchange markets, well, it's a firm day for the dollar, as you might expect. Sterling off nearly 1/5 of 1% against the greenback. It's off 1/10 of 1% against the euro. Euro, single currency, meanwhile, slightly lower against the dollar. As for the oil price, well, that has snapped out of its 3-day losing run, but it remains pretty close to its lowest level since the second week of March. Barrel of Brent crude will currently cost you $83.58 a barrel. That's off just under 1/5 of 1%. Joining me this afternoon is Lucy Coates. She's Investment Director, of course, at JM Fin. Lucy, good to see you today. I suppose we should start with the Fed, shouldn't we? Because it was a fairly hawkish kind of statement from Jay Powell, wasn't it?
Yes, I mean, it was. I mean, markets are still very reactive to various data points, economic, employment, that's tomorrow, and inflation. Now, what Powell admits is that they haven't yet beaten inflation. But last year, in the last quarter of last year, we'd expect 7 cuts from the Fed. Then we moved that to maybe 2 cuts. And now, a couple of weeks ago, we then thought, oh, there's a possibility of a rate hike. But what he did say was that the expectation is that the next move will be a rate cut. But where we've now moved from a cut in September, we're looking at November. So it's sort of kicking the can down the road. But markets have really responded to this.
Well, of course. And November, US presidential election. I mean, dare the Fed move that close to an election?
Well, I think Biden would have wanted one sooner. But, the central banks have to remain independent for a foreseeable future, at least. So hopefully we'll get the cuts that the markets really want. But the US economy is really resilient. Yes. We're seeing OECD numbers coming out today, slightly lifting global economic numbers. UK downgraded. So maybe the Bank of England may well have to come sooner than the Fed.
And all of this, lest we forget, very, very positive for the dollar.
Yeah, exactly. And of course, then we've got this sort of battle with the yen. So we've seen that really, really weak. And there's rumour that the Ministry of Finance in Japan is intervening.
Yes, indeed.
But no confirmation.
Yeah. Now, after the close tonight, as I mentioned, we get Apple's results. What are you looking out for?
Well, we're going in there with really low expectations. The share price is down about 11% in the year to date. In context, the Nasdaq is up nearly 4%. So, there's quite a big disparity between the two. And I think really we're going to see iPhone sales down. We've got a lot more competition coming from China and their own handsets.
Huawei, yeah.
Exactly. So we're going in there very unusually with this low expectation. So I think if the numbers come in with revenues at, I think we're expecting 90.4 billion. If they come in anywhere near that, that's good. But what I really hope to see is a better outlook. And Apple actually is not at the forefront in investors' mind in AI. You've got the Alphabets, Amazons, Microsoft, Nvidia, that's all AI. Apple will be doing something, but we just don't know what. So let's hope we hear something.
There's always something of interest, isn't there? Now, closer to home, of course, we got results today from Smurfit Kappa, a company, we should say, sadly, off to the US fairly soon.
Yeah, it is WestRock. So one of the updates today, WestRock merger, it's progressing, it's on time. That's going to be completed early July. But what's really good for this industry is that they're seeing industry trends are much more positive. The long-term outlook is more positive. So you've seen also the share price of DS Smith lift as well. So it's good to see. But the shares of Smurfit Kappa are trading at a massive discount to its US peers. Sort of 25%. So it'll be interesting to see what happens to the share price on its merger with WestRock.
OK, Lucy, got to leave it there, I'm afraid. Good to see you as ever. Thank you.
Thank you.
That's it from me for this afternoon. There are no business programmes tomorrow, I'm afraid, because of our local election coverage. I'll be back on the Tuesday after the bank holiday at 11:30. Hope very much to see you then. Have a great weekend. And coming up next, it's Mark Austin with the News Hour. Cheerio.